The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the October 27th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. Hope everyone out there had a terrific weekend. Let's make sure that we do all that we can do to have a terrific week. And we should always remember we should never, ever, ever be prisoners of our past, but instead be pioneers of our future. And let us always remember that you cannot be anything if you want to be everything. I got that from a fortune cookie this weekend. Thought that I would share that with you. Hey, I'd love to hear what you did over the weekend and what you're looking at. The easiest way to do that is to give me a call at 877-927-6648. Internationally, you can reach out at 727-445-1044. Then together, you and I, we can go taking a look at the markets. We can go hunting for bulls and bears. We can share with the Tiger Nation out here. It is Magical Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. Dow futures off 72 points. They're trading out at 16,663. NASDAQ off 14, trading at 40.20. Russell 2000 off about 6 points. The ES Mini, the S&P futures, they're down 11, trading at 19.48. Goldilocks off a buck. Silver down 3 cents right now. Light sweet crude off a buck 47. A quick peek across the globe. Let's see what we have going on over in Europe. Right now, the DAX is off 124 points out there, off 1.4%. The FTSE down 41. She's trading out at 63.47. A mixed bag in Asia last night. We had the Nikkei 97 points. That closed out at 15,388. The Hang Seng off about 0.7%, closing out at 23,143. That was off 158 points out there. The Shanghai down 12, trading out at 23.97. Looks like we may get that little retracement. Well, I can't tell you whether it's going to be little or not. Looks like we may get that retracement here over the next couple of days, just simply providing you with opportunities to buy into this extremely, and I do mean extremely, bullish market out here. Let's go take a look at the futures contracts. Let's go take a look at the daily futures contracts. Let's go see what they're doing. We're going to start off with the daily contract for the NASDAQ out here. If we take a look at the NASDAQ, if we go from our swing point high, that's September the 19th out there. That high came in at 41.1875. If you go from that high down to the low that was put in on October the 16th, and that was out at 36.84. If you go from the high to the low and you use your retracement ruler, what you're going to find is that right now you're sitting right at the point 786 retracement. 4,025.71 is the exact number. You're trading at 4,022. No real significant reversal candles on a daily chart here as of yet. This suggests that they pull back. As far as where could it pull back to? Well, on a daily chart, we can do a couple things. One, you can take a look. Let me go ahead and get rid of the retracement. So first, you're at the 0.786 area. This says to me, you know what, market's likely going to get up and test the September highs at a minimum. Yes, I do mean at a minimum out here. Let's take a look at where we're at right now and take a look at potential retracement levels. Number one, if we just simply use our TAS market profile system, and no reason not to use that, we would have to say that you should find support about 39.02. You're at 4,022 right now. Pretty decent fall out there. So that would be one level that we would be paying attention to. If we go take a look at retracements, what we're going to do is we're going to go now from the low from October 16th to the inter-session high here this morning. And what we'll see is that the dead cat bounce, the 0.382 retracement, well, that happens to be 39.10. So you got 39.10, 39.02 is the first area of significant support inside of the NASDAQ. This has been super strong. I would expect that that may be all that we would get, if in fact that's what we get inside of a retracement out there. So that is the level on a daily chart that we want to pay attention to. If we take a look at the 5-hour energy chart out here inside of the NASDAQ, well, what we have is one of Stevie's price relative strength divergent patterns here that is setting up. You got a nice reversal signal here at 9 o'clock this morning. A little bearish engulfing, bear sash candle. We'll see if we get some additional follow-through over the next 5 hours. This is a 5-hour chart out here. And that means you've got to get confirmation with a continued move lower. We've got one of Mr. Basil Chapman's 7th wave up potential. 7th wave up patterns up here as well. So you've got everything in place. Now, the retracement, if you're watching this on Tiger TV, you've got this descending price channel on the 5-hour chart. The price broke out of, came back and tested it. It says, hey, the price movement is real. That says that right around the 39.86. What did I give you? 39.910 or something like that? The 39.86-ish type area, at least during this 5 hours, 39.84, would be a level of resistance from the descending price channel out there. So everything's really kind of lining up rather nicely as we take a look at that. If we go take a look at the 120-minute chart for that, we're going to do this here for the NASDAQ. We'll do it for the Dow. We'll do it for the ES Mini, just to really line things up for you. If we take a look at the ES Mini, the NASDAQ on the 120-minute time frame, I'll get it all straightened out there. We can see that there should be pretty decent support here on the 2-hour chart, right around the 4,003 level. That is the unfair low. That is the bottom of the box using that TAS market profile. You can see that blue diagonal-ish type line going across my screen out here. That, too, should be an area of support, and that is on the 120-minute time frame. If we go take a look at the 30-minute time frame out here, in this case, we're looking to see what kind of candles we've got that have formed. Now, inside the 30-minute time frame out here, probably the chart that's provided us with the biggest signal of some type of impending retracement. You moved up at about 3:30 a.m. this morning. You got up to a nice price, relative strength divergent pattern. You got up to a 7th wave out there over the course of an hour. That means coming in at 4:30, we got our reversal signal. We got our evening star formation pattern out here. And then we saw it close below the market profiles out there. That's utilizing all the many different techniques that are available to you here at TFNN.com. We've also seen it close below what? Below the hammer candle. That's the hammer candle that took place at, at 6:30 a.m. out there. You know when you close below a hammer, it's never a good thing. That says you're going to move down to the next level of support. At this stage here, it looks like we've got more to the downside out there. But if the market reverses from here, folks, in a spectacular fashion, boy, will it be telling us about that tremendous strength, the tremendous and significant, and I do mean significant, bottom that was put in this market on the 16th of October out there. So we'll continue to watch that. Let's go take a look at what's going on inside of the, what do you want to look at next? You want to look at the Dow or the ES Mini? All right, let's go take a look at the ES Mini. Let's go see what's going on out there. I heard you in the background, so thanks for offering your suggestions. Now, let's do the same thing here in the ES Mini. What do we know? Well, first, you've got that 1 to 1.618, A to B equals CD. To the downside, that form there, almost to the tick out there. That set up the Gartley buy pattern out there. And if you want to learn more about the A to B equals CD pattern, go to the homepage at TFNN.com on Wednesday at 4:30 in the afternoon, Eastern Standard Time. I'm going to be doing a workshop for eSignal subscribers. We've provided you guys with a link because you're so special, and you are. We've provided you with a link on the homepage of TFNN.com. Right underneath breaking news, it says free workshop with Steve Rhodes. Go click on that. That'll take you to the eSignal sign-up page, and then you've got access to that free workshop. Now, every Gartley pattern has got 5 different potential outcomes. If we take a look and see where we're at inside of the S&P, that means we're going to go from the high from September 19th down to the low that came in on October the 15th. And you'll see right now you're between floor number 3, which would be the 0.786 retracement. That would be that would be 3 of 5 outcomes out there. And floor number 2, the 0.618 retracement level, and that's at 1937. Never really hit the 1971-ish area. You're starting to see a potential. This is called a dark cloud cover candle. But we got a lot of time left in the trading session out here. If we take a look at potential retracements going on inside of the S&P, let's take a look at the daily contract out here. Let me try to delete some of these things. There we go. Let's take a look at its retracements. Now, inside of its market profile resistance level, that would take us to 1937 or 1949. So we ought to see it test that area today. 1929 may be another area of support. But let's just take a look at retracement areas. We're going to use these as kind of road markers to see where price should pull back to. 1907 is your 0.382 retracement. So those are the areas I'd be watching. 1937, 1929, and then 1907 out there inside inside of the S&P futures. If we go take a look at its 5-hour energy chart out there, we're going to put that up on our screen. We're going to see a little bit stronger in one sense than the NASDAQ, than the NQ's 5-hour chart out here. At this stage, no price relative strength divergent pattern. Yeah, we got a little bearish engulfing candle. That confirmed here at 9 o'clock in the morning. We'll see if this level here gets any additional follow through to the downside. It also has a descending price channel. So around the 1935-ish area should be pretty darn good support for the S&P futures. We'll see if that level holds. Let's go take a look at the 2-hour chart for the S&P futures. Let's go see what kind of signals it has. Hey, it's got a price Rhodes momentum indicator signal out there. We got a nice bearish engulfing bear sash candle. That took place at 6 a.m. We got some follow through into the 8 a.m. session here. 1945 is its level of support inside of the ES Mini. That is the unfair low. We have not seen the ES Mini break the unfair low as it came off of the lows out here back at October the 15th, October 16th. When was it? October the 16th out there. So we'll see if that area holds. I would say if that area fails, that's an indication of a little bit deeper retracement. And that's a retracement, folks, that you want to be looking to buy, as Santa is going to provide you with maybe one more opportunity to buy a significant low inside of the market. If we take a look at the 30-minute chart out here, 30-minute chart also having that price Rhodes momentum indicator signal reversal out here. Let's go see where we're at in the trough count on the way down out here. Let's use the color blue out here and see where we're at, only in the second wave on the way down out here. So expect a market. This is what we should expect. If it doesn't happen out there, oh my gosh, does it tell us how strong this market is out here. We should expect selling pressure into, throughout most of the day, I would think. Let's go take a look at what's going on inside of the Dow futures out here. Let's do the same thing. I might have to hustle because I've only got 1 minute to do it. If we take a look at the Dow futures from high to low, meaning from September 19th down to the low out here on October 15th, October 16th, what the Dow has done is made the 0.618 retracement level. 16,702 is that number. You're trading at 16,662. Let's go take a look at retracement levels here inside of the Dow. Inside of the Dow, we would go ahead from the low. We're going to use retracement levels from the low to the high. It's already trading below the market profile resistance area, and that was at 16,713. So that's at 16,404 is likely in the cards on a retracement inside of the Dow. We'll see if it can do it, boy. If it can't do that, you're talking about the mucho strength in the market. If we take a look at the 5-hour energy drink chart here for the Dow, just like the NASDAQ out there, it has also gotten into that seventh wave formation that took place out here at 4 a.m. this morning. Little bearish engulfing candle on that 5-hour chart as well. We'll see. When we get back, let's go take a look at some stocks that are popping and dropping out here. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, let's go head out to Rio de Janeiro via our man John from Philly. John, how you doing this morning?
Hey, Steve, good morning to you. Well, it's not quite Rio, but Port of Philadelphia does import fruits from Brazil, so maybe we're close.
Yeah, I think Philly's the sister city for Rio.
There you go. Steve, I'm calling in to share an observation of mine regarding Brazilian stocks.
Yes. And
ask for your read on the situation. First and foremost, we know that the runoff elections in Brazil occurred over the weekend, and the incumbent won, and there has been selling in Brazilian stocks overnight and selling in the Brazilian currency as well. And the observation I have to share is just an interesting observation as I see it. Could also be an actionable idea. And I'm looking at the ETF known as EWZ. That's an iShares ETF. Mm-hmm. And that opened this morning down 10% from its close on Friday at 41.40, getting down to about 37 even. Mm-hmm. And what I was looking at and shared in the Tiger's Den, which, by the way, is a fabulous resource if you ask me.
Absolutely, thank you.
Is that that area down near 37.90 to 37.5. It happens to be two things. One, the swing low of February 2014, and it's the exact fib 786 retracement support mark that comes in when viewing the rally from the 2008 bottom into the 2011 top. Now, one can assess the political implications as far as the economic impacts down in Brazil. And one can, I can't concoct a bullish scenario for you with leadership remaining as it is. But the stock market there and the currency have fallen quite a bunch, which begs the question, has the negative news been fully discounted? And my observation is this: if the panic selling leads to buying and sets a low, it is possible that a beautiful pattern and a test of Fibonacci support could in fact set a bear market bottom. So that's just an observation and potentially an actionable idea. As I see it, my question is, what do you see as far as parameters that can help, guide us on taking action here?
Sure. So excellent analysis. And, in essence, folks, what John was also taking a look at is he identified that 37 area as a 0.786 retracement level. And it also sets up a potentially sets up longer-term Gartley buy pattern. So it absolutely is worth noting. Now, the chart that I've got on my screen here at the moment, John, is the currency, the real. And that's on the upper portion of my screen. And then the EWZ, which isn't trading it's trading in the pre-market. It's not on my screen here trading at the moment. But what we can see here is you can see the direct correlation between the currency pair and the ETF. So that really gives us a couple of places to look, in my opinion. That gives us a couple of places to look to try to identify where reversals could happen. And so I would say the currency pair is what's going to rule. And I think that what we should be doing is keeping a close eye on the currency pair, looking for some type of reversal signs there. It may be on a shorter term time frame, trying to identify A to B equals CD to the downside, maybe the change in, maybe on a 5 or 10 minute basis, maybe a change in trend by doing some form of A to B equals CD to the upside. So I say that one of the places that we need to look and focus on is going to be the currency pair. Now, many people that are going to trade the EWZ don't pay attention to the currency pair. I would suggest to you that would be that it would be in your best interest to look at the currency pair since of its direct correlation to what goes on there. So that's the first thing that I would at least point out to folks. If we go take a look at the EWZ itself, and we take a look at... Hey, John, can you hang on through this break?
I can. Thank you, Steve.
All right, we're going to go back out to John after the market opens. We'll take a look at the iShare Brazil EWZ ETF. This is Steve Rhodes. This is TFNN. We're going back out to Rio in Philly with our man John as soon as we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 44 points. Trading out at 16,760. The S&P down 6 at 1958. Composite off 11 at 44.71. Russell down 7 points. She's trading out at 11.11. If we go back out and take a look at the EWZ for our man John, he had to take off. But let's go finish this off and take a look at it. We're going to first what we've got up on our screen here is the monthly chart for the EWZ. And what we do know about it is if we take a look at the swing point from April, first it's trading inside the swing from November of 2008 out there. So the top of that is going to be 41.32. So one of the first things that you're going to want to, if you're going to trade the EWZ, you're going to want to see it clear that 41.32, because when you're inside a swing point, in this case here, it's with big volume. That swing point only has 466 million. You've done 771 million to date for the month, and we've got a few days left in the trading session. So whenever you close inside a swing point, especially if you close inside it with volume, suggests that the low could be tested. That would be 25.39. What we also know is the B point of an A to B equals CD to the downside has been busted through with volume. That is from the month, and we're looking at a monthly chart here, so it has more meaning. October 1st, 2011, 448 million shares there. Last month, you closed below that with 621 million shares. So the monthly charts say if this area here fails and you're below a TAS market profile low out there, again, it's a monthly chart. We have days left in the month out here. That says 32.99 could be the next target. I would have to say until you get that swing point, you're coming into it with a bunch of volume out there. So that's what I would be focused on. Then go down to some of the shorter term charts, and do not forget to pay attention to the real out there. Hey, let's go out to Nashua, New Hampshire, to Jerry. Jerry, thanks for calling. Thanks for holding. How you doing this morning?
Good. Yourself, Steve?
I'm doing excellent. Did you have a nice weekend?
Yes. Had a good weekend. Nice
Excellent.
weather on Saturday.
Ah, good. Not nice weather on Sunday?
Well, not as good as Saturday, but yeah, it was pretty good.
Ah, good. Okay. You want to take like a Great Panther Silver. GPL is a ticker symbol. Tell me what you're doing, how I can best help you.
Well, what I was looking to do is I was looking for an entry point to go long, and if long was the best way to go.
Well, you definitely don't want to short this stock. That much is for sure. Go ahead. I cut you off there.
No, I was just that's what I was thinking. I don't think that I want a short stock. I was looking for an entry point to go long.
Absolutely.
Right?
Absolutely. Okay. Here's what we know about Great Panther. So if we take a look at the stock chart, one of the things that first what's your from a trading style standpoint, and as you're taking a look at Great Panther, what is your time frame that you're looking for as a trader investment on this equity?
It's not short term. It's say the 2 to 3 month time frame.
Okay, all right. That helps me out.
Not a day trade kind of a thing.
Yeah, okay, great. And the reason is because I think it's from a longer-term standpoint, this ends up being what should be a pretty good trade for you. And the reason is because you've got, even on its daily charts right now, we've got some nice volume up at its highs. Now, in this case here, those highs being in the $1.40-ish type range, you're trading at 85 cents right now. So that's a good thing. That's a positive. Now, finding an entry point on this, we're going to go to a couple different time frames. The first thing that's negative that we don't like about it is that the big hammer candle that it had on September 22nd, that low has failed. So that's 89 cents out there. If we take a look at just A to B equals CD down patterns on this, our A point's going to be the swing that you're in essence gunning for from your 2 to 3 month time frame trade, which is going to be right around the $1.48 range out there. So I would put that as my A point. My B point is probably going to be down here on September the 8th, and C point, little retracement into September 17th. Now, it did hit the 1-to-1 A to B equals CD on October 23rd, and that was at 81 cents out there, and that held. We haven't seen any kind of reversal signal. I would say you're more likely, and this is more likely, looking at a potential run to the 68 cent area. And 68 cents gives you the 1 to 1.272 A to B equals CD, and that takes you all the way back into its swing point from December 4, 2013. So a targeted area somewhere between, let's call it 66 and 71 cents, maybe it's 81 cents, unless we see some kind of reversal inside of silver. If we see a reversal inside silver, then we ought to see a significant reversal inside of Great Panther. Now, what we should also do, Jerry, is just like we did with the EWZ, let's go put the monthly chart up on the screen out here and see if this is trading into that swing point, its monthly swing point. And the monthly swing point low gets us back to December, and there's not a lot out there. The high there is 66 cents. And, no, the high is 75 cents. My apology. The high is 75 cents. The low is 66 cents out there. And there was volume of 8.9 million. You're already at 9.4 million. But I don't think it's tested 75 cents, did it? No, it's only gotten down to a low of 81 cents. Its TAS market profile low on a monthly basis is 76 cents out there. So am I giving you enough of a range for you to, take a look at going long? Is that enough information yet? And if it's not, that's okay, but I'll keep operating on it.
No, well, you're saying that the entry point would be in the range of 66 to 71 cents, right?
Yeah, even 75. You could take a look at. I'm looking at the weekly chart. I just popped the weekly chart up on my screen. Just really curious. Its swing point low is back in December here, and the high on the weekly chart is 73 cents. The volume there was 1.6 million, and the volume so far for the last week was 2.4 million shares. It's coming down into that level with some pretty decent volume. It's a good-looking stock chart. If you look at the weekly chart, it's really a beauty because that July 7th, the week of July 7th, 9 million shares up with those highs. So I think that, just use proper money management on this stock just as you would on any other stock, and you're really gunning for that 140. I wouldn't put your exit at 149. I'd put it just a few pennies below that.
Yeah, what would if I were to get in at the 66 to 71 range or 75, what would be a good stop point to put in just to protect myself?
So it's great question. Thanks for asking that question. It looks like the actual low on this equity takes us back into June of 2013, and that low is 65 cents. I think if it closes below 65 cents, let me see if I can pull this back even. Well, let me put this back on. Let me put it on a quarterly basis. Let me see if I can do that here for you, just to give you an idea. Where's the quarter? There we go. It'll be a little bit easier for me to look at the swing points out here. You'd have to say if it closes inside 65 cents, that would not be a good thing.
Okay.
And the reason is because that takes you back to October of 2008, and the low down there is 14 cents. You really don't want to see it close inside that level.
Okay.
So that's how I would take a look at it.
Okay.
All righty.
All right. Thank you.
You bet. Thanks so much for calling. That was Jerry in Nashville. That was ripping apart Great Panther Silver out there. Technically speaking, it's got a pretty good-looking stock chart out there. Let's go take a look at some things here that are moving and grooving in the marketplace this morning here with the Dow off 49 points, S&P down 7. Moving to the downside, hey, one of our friends, Sarepta Therapeutics, SRPT, down 33% on news that they're going to file for approval with the FDA on their drug that fights Duchenne's, I believe, is the disease that it is after. It's down 33%. Now, this stock here has had some wild rides. This is the daily chart out here as we take a look at it. Let's put this back actually even on a weekly time frame. So this will give us a better view of the different wild rides out here. This thing had broken out substantially back here on the first breakout inside of this equity took place July 23rd, 2012. Now that breakout session runs anywhere from 345 to 911. You're trading at 1575 as we speak right now. That would be a really nice buy. That being $9.11. I don't know that it's going to get back there. What it does have, though, and then it has a nice little breakout session here from the October 1st time frame. Now, during that week, and it was really almost during the day, it went from $14.84 up to $45. But it didn't stop there because this equity went all the way up in October 2013, got up to a high of 55.61. Of course, it had a big fall. I don't recall what was in there, and it doesn't really matter. But this is a high-volume low out here on a weekly basis. This is likely where Sarepta Therapeutics is headed to test the bottom of that low, which is 12.12. I don't even know saying the bottom of the low. How about the bottom of the candle? And so 12.12. That would be a nice little buy area, potential buy. So your buy area is on Sarepta Therapeutics. Your potential buys, if this is a stock that you're looking at from a weekly perspective, says, hey, 12.12 would be a nice test. Now, if we switch back over, that was the week of November 11, 2013. If we go see what it looked like on the daily chart out here, just to get a feel for what's happening here. Let's pull this back. Let's pull it back into that session. So it's already tested. It's already inside that session. All right. So on the daily chart, so that's a bonus of November 12th, 2013. The high is 1670. The low there is 1235. It made a little bit lower low the very following day, and that low was out at price point of 12.12. So there's our 12.12 number. So as long as this trades inside this swing point here, that means it doesn't close above 1670 because volume there was 38 million shares. It's done 4 million shares in the first 15 minutes of trading. Look, if it's picking up volume and it does more than 38 million shares today, then it says it's most certainly would like to go test that low at 12.12. If it rejects this level, meaning it closes back above 1670, the selling could be over inside of Sarepta Therapeutics. So you've got the swing points to be paying attention to. You got the volume bars to be paying attention to. At some point in time, this stock probably does take off to the upside out there. But like with any stock, if you just simply use some nice money management techniques and rules out there, you should be okay regardless of what the stock does. Let's take a look at some other things here, popping and dropping. Let's go on the dropping side out here. Let's go take a look at Pioneer Natural Resources. PXD is the ticker symbol. That's off 4%, down $7 as we speak right now. This is the daily chart on this, and this thing did a 1 to 1.6188 B equals CD. Nice key reversal session out here on October the 15th. That swing point has got 3.7 million shares, so it's both a key reverse. No, it was not a key reversal session. It was just simply a bullish engulfing session. It does have volume at that low. It looks like the top of that at least is going to be tested, 172.68. If this closes below 172.68, says the low ought to be tested. 156.82 is the number. That is on Pioneer Natural Resources out there. Let's take a look at some things that are moving to the upside. Let's kind of flip back and forth as we take a look at lead the charge. You got Google to the upside out here. Google up 0.8%, up $4.50. Let's go see what Google is doing here. Google off of its lows. Now, Google had an earnings release recently. I think that it was on October the 17th, if I am not mistaken. Well, it might have been the evening of October 16th. Usually the earnings calendar shows up on this chart. Why is it not showing up? Makes it a little bit difficult. Now, what the reason why I'm looking for that is because Google will typically go ahead and trade in the direction once its earnings come out, and you see how it trades for that next day, the day or two. It's a really good sign for the direction that Google should head in. If we take a look at Google off of its most recent highs down to the low, its most recent high being September 19th, so just like the stock market, go down to the lows, October 17th, similar to the stock market. Well, we can see it's made the 0.382 retracement. It's a little bit weaker, most certainly than the NDX 100, most certainly than the NQ out there, so weaker than the market in general, but still not too bad. Nice little V-shaped formation. It's trading right at its market profile high. Resistance level out there, that's in this 553-ish type range out here. I can tell you exactly what it is. 552.50 is the number there. If it can get above that level, that would be bullish. And watch we got to see how Google deals with that October 23rd swing point. The high out there is 557.40. Volume is 2.1 million shares. You're pushing into it today with 186,000 shares so far in the first 18 minutes of trading out there. That is on Google. It looks to me like Google wants to make a run to the 572 area. It's 0.618 retracement. Let's go take a look at, we've got McKesson Corp. MCK is the ticker symbol. That's trading down up $2.20, a little over 1%. I don't see any news on the earnings front out here. McKesson, this looks pretty strong. McKesson here is above its swing point from October the 3rd. That had 1.2 million shares. You've done 186,000 as we speak right now. It's up and over that. It actually got above that level with 775,000 shares lighter volume on Friday's session. Let's pull this back a bit here. McKesson is a strong-looking stock chart out here. Now, McKesson is, it's in the pharma business. It's in the, they provide most of the product to all those GNPs out there, all those good neighbor pharmacies. Looks to me like McKesson wants to take a run for the 210. This is Steve Rhodes. This is TFNN. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 67 right now, trading out at 16,738. S&P down 12 points, so weaker than the Dow. She's trading out at 1952. Composite off similarly, 0.6%, off 26 points, trading at 44.56. Russell 2000 is the one that is weak out here. She's down a little over 1% this morning, trading out at 11.05. So we'll take a look at the Russell 2000 as we speak right now. Let's go take a look at it, see what it is doing out here. I'm going to change this back to a daily time frame. That'll make things a little bit easier for us to look at. So as we take a look at the Russell 2000, This has come off nicely off of the bottom. If we take a look at retracements out here, the retracement being from its most recent swing point high. So I'm not going to September 19th. We're going to September 3rd when it made its most recent high. So if we go from that, well, you got to grab the right tool out there. If you don't grab the right tool, you can't get a retracement level reading out here. Let's go and try it again. There we go. So if we go from the high to the low, we'll see that the Russell was just shy of making the 0.618 retracement level. Now let's take a look at areas where this thing could pull back to. We're going to take a look at the retracement to the downside out here, just to give us a range for what we should be looking for. With the Russell pulling back the most here this morning from a percentage standpoint, the dead cat bounce, the 0.382 level says 1091. You're at 1105, so 1091 is going to be the first area to be looking for. If that level fails, you're coming in there with volume, meaning we'll take a look at the IWM, or we'll do that during the second hour today. That would say, hey, just a normal retracement into about the 1071 level. Remember, this market has made a significant bottom. A very, very, very significant bottom out here. And as you've heard me call that market bottom, I've also been looking for the market to have a retracement. And my preference has been a scary retracement. I'd love to see a big retracement. I would love to see everybody say, hey, that bottom that you were calling for, Well, in my opinion, that would not be the case. We're looking for a retracement in order to be able to buy here. Now, look, you take out the lows from October 15th, then it's a different story out there. But otherwise, the retracement that we're seeing in the market could easily last for a couple of days out here. I would think through Wednesday would be it. Now, we've got the Fed coming out as well on Wednesday, so it's just coincidental. I had no idea that the Fed, I believe it's Fed's coming out on Wednesday, but I've been calling for a pullback, potential pullback into Wednesday before I even knew that the Fed was coming out to just simply tell us that which we already know out here, which is that they are ending their round of bond buying as which has been in place for a long time out here. So the Russell 2000, look for that to target the 1181, maybe the 1071-ish type area. If I take a look at the futures contract, let's just go take a look at the 30-minute chart out here, see what kind of A to B equals CD down pattern maybe we've got setting up. And at this stage here, not much of one that I'm going to go ahead and give you a price target on that. We'll just simply stay with the Russell 2000 index and its a price target area, just using our retracement levels. Let's take a look here at the NASDAQ. So let's go see what we've got going on inside the NASDAQ. We were taking a look at the different time frame charts here earlier this morning. What we know about the NASDAQ, again, it broke through that little hammer candle right back here at 6:30 this morning. You're trading below that level. It's been tested. We've seen price here as the market opened try to bounce up. It got up maybe to that point of control level inside of the NQ on its 30-minute basis, right around the 4,032 level. Again, it looks to me like there's more work to be done to the downside inside of the NASDAQ. So we'll watch the NASDAQ. We'll watch the Russell 2000 for those reversal signals that the move lower is over. Folks, it is Magical Monday. Thanks so much for joining us here at TFNN. If you're off to start your day, have a great day. Otherwise, I look forward to seeing you in about 10 minutes. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.